Hello and welcome to the Friday Market Update. So I want to start with a story today. So for centuries, people believed that all swans were white. In fact, it was considered an absolute truth. If you saw a swan, it was white. End of story. Then in the late 1600s, European explorers arrived in Australia and discovered something they didn't think existed, a black swan. Something people believed was impossible suddenly appeared right in front of them. That discovery gave birth to a concept economists now call a black swan event. A black swan is a rare, unpredictable event that shocks the system. It comes out of nowhere, changes the narrative quickly, and creates a lot of uncertainty in financial markets. We've seen several of them over the years. The 1987 Black Monday crash, when the stock market dropped 22% in one day, the September 11th terrorist attacks, which shut down markets and disrupted the global economy, and of course, the 2008 financial crisis, when the housing and banking system nearly collapsed. So these are events that no one sees coming. But once they happen, they change everything for a period of time. And right now, the markets are reacting to another potential black swan type event with the turmoil in the Middle East. Whenever geopolitical conflict escalates, one of the first things that reacts is oil. Oil prices spike because traders worry about supply distributions. They can't, when are they going to get there? We're seeing that right now. When oil spikes, the markets start worrying about inflation. Everything is based on oil. Shipping, all that stuff that goes into products is based on oil. And when inflation fears increase, mortgage rates often move higher in the short term. And that's what we've seen today. So the rates have moved up, and they've been moving up a little bit because of the conflict. Now, that's exactly what we've seen. So, but here's the important thing to remember about markets during moments like this. People tend to overreact. Investors don't want to be caught on the wrong side of a potential problem, so they react quickly and sometimes too aggressively, and markets move further than they probably should have. That's what we're experiencing right now. We've entered what I call the quote uncertainty zone, and nobody likes uncertainty. It's just scary, right? Uncertain. I don't want to do anything, so they pause. So buyers don't like that uncertainty. Investors don't like uncertainty. Businesses don't like uncertainty. So what do people do when uncertainty shows up? They stop, they pause. But here's the perspective that's truly important. Even with the recent movement upward, mortgage rates are still a lot lower than they were a year ago. And there was another major piece of economic news today that almost nobody is talking about because of the geopolitical story that's dominating the headlines. And that's the BLS jobs report, Bureau of Labor Statistics, the one that just drives me crazy every single month. Well, guess what? The jobs data came out this today, and it was negative, a big negative in terms of job growth. So, if you look at the underlying numbers, job growth was essentially negative for the last 6 months. And when you factor in revisions and population growth, it's anemic. Right now, we just are not seeing as strong a labor market as we have seen in the past. So why does that matter? Because there's two things that drive mortgage rates. Number one, inflation. Number two, employment. When job growth slows, wage pressure slows. You don't have to raise your wages as much. When wage pressure slows, inflation tends to cool down. And when inflation cools, mortgage rates really tend to move lower over time. So if this geopolitical black swan event wasn't dominating the market narrative right now, the bond market would likely be focusing on the weakness in the labor market, the cooling inflation, and we would see rates easily in the fives. That can happen. It just is going to be a period of time. And that type of data normally supports the mortgage rate, lower mortgage rates, and not higher ones. But again, this is what happens during periods of uncertainty. One narrative temporarily overwhelms everything else. The market reacts quickly and people hit the pause button. And here's why that matters for real estate. When buyers pause, competition decreases. And when competition decreases, opportunity increases for the buyers who are still moving forward. Because history has shown us something very consistently. I've been doing this for many, many years. When mortgage rates move lower, home buyer demand increases and values go up. So that's really as simple as I can put it. So there's a strategy that experienced buyers often use during moments like this. They focus on locking in the home price first, and they don't worry about the interest rate. The interest rate can be changed over time. The home price, it's fixed. You can't go back to the seller and say, I want a lower price. It just doesn't work that way. If you can purchase a home while competition is lighter, you can secure the price of the asset. Then if the mortgage rates move lower, guess what? You could always refinance the interest rate to a lower rate. But once home prices move higher, you can't go back and buy the home at yesterday's price. It just doesn't work, as I said. And that brings me to one of my favorite analogies, the buffalo. I love the buffalo growing up in Colorado. So when a storm rolls across the plains, most animals look at it and they try and run away from it. And they try and outrun it. Cows are slow. The herd is slow. They can't outrun the storm. The buffalo does something different. They look at the storm and they run directly into the storm so they get out of it. When they move into the storm, they actually get through it faster so it's not on them forever. And so in markets like this, buyers and agents face the same decision. Follow the herd and wait? I don't think that's a great idea. Or face the uncertainty head on while others are sitting on the sidelines. This is opportunity. Black Swan events create volatility, but it can also create incredible opportunity. And historically, they're temporary markets, and eventually they stabilize. Clarity returns, and when it does, the opportunities that existed during the uncertainty tend to disappear quickly. So if you're working with buyers right now, remind them of the bigger picture. Give them perspective, give them the overall view, and don't panic. Stay focused on the long term because real estate is long term. Most people stay in their house 7 to 10 years. It's long term. This is just a point in time. And sometimes the best opportunities appear when everyone else is waiting for certainty to come back. Be the buffalo. And I'll see you next week. Gaylord out. Take care.